Hi there, welcome to Grain TV. I'm Kevin McNew. It's Wednesday, August 24th, another down day in the grain market. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, beans, the leader to the downside, giving up 9.5 cents a bushel with new crop Nove beans hovering around that $10 mark. Wheat in Chicago also grinding lower, losing 3.5, and corn in Chicago losing 3/4, although it had been a penny higher. But the trade continues to be pretty listless in the face of what looks to be a very large crop. Let's take a look at some of the news before we get to the third day of ProFarmer's crop report. First of all, let's start in the crude market, which has been on a downhill slide really to start the week. Because of the prospects that OPEC is not going to reach any sort of supply cap or supply cutback in their meeting. Also, expectations of continued oversupply, and we got news of that today with EIA's formal crude stocks number coming out well above expectations. Traders have been looking for about a 400,000 barrel drop in crude inventories week on week. Instead, we got a 2.5 million barrel build, so that really sent the crude market down about $1.40 a barrel as of this taping. Other news out, USDA announced a sale of corn, 101,000 metric tons to unknown destinations. Very small deal, but on the other hand, in the face of what seems to be pretty dire price situations, any news is good news right now that gets more of that crop out of the country. Let's talk about the day 3 results so far from ProFarmer's Crop Tour. The tour, again, in 2 segments, one an east segment, one a west segment. The east segment has now traversed their way into Illinois. They are finding really good yields there, really good yield potential, although maybe a little shy of record yields in the case of corn, but they say nonetheless the crop looks very positive there. In Iowa, sort of a mixed bag. Corn looks pretty good, they're saying, while soybeans is coming up a little shy, although recent rains may help the soybean crop down the road. Let's take a look at the actual numbers out of these reports. So first of all, we've got 4 states under our belt in the crop tour through 2 days. Those states, Ohio, South Dakota, Indiana, and Nebraska. And what you can see in corn is some discrepancies, at least in percentage terms, year on year between ProFarmer's changes and what USDA is projecting. And I think, first of all, Ohio is one that sticks out, where USDA is looking for a 7% increase year on year in corn yield versus ProFarmer, which found really no change in corn yield from their survey last year. Also, Nebraska a little bit off in terms of what ProFarmer has seen versus last year, while USDA is expecting a modest 1% increase. Nebraska is always a little hard to call because of the extent of pivot irrigation going on there, but nonetheless it is problematic. Now, in today's numbers, we're looking at only one segment of the crop tour results because we don't have the final numbers for the state. We're only doing this through what they reported midday. But in the eastern part of, or eastern central part of Illinois, they are seeing higher numbers, 7% higher than last year for those same stops, versus USDA looking for a 14% increase. So far, and again, they haven't reported the full numbers for Illinois yet, but so far through the midpoint of the crop tour today, they're a little shy of USDA's projection. While Iowa, so far they're seeing numbers that are certainly indicative, a 9% increase versus USDA's 8%. In soybeans, these are less precise because they are pod counts, so the percentage terms may not line up exactly, but they're at least an indicator to use in maybe suggesting what yields may do. And again, Ohio showing a pretty significant drop in pod counts according to ProFarmer from last year, while USDA is looking for an increase in yield over last year. And in Iowa, again, not fully formed yet because it's not through all of the state, they're showing a fairly significant drop in pod counts, at least through the segment of the southwest part of the state, while USDA is seeing yields that are pretty steady. On the other hand, conversely higher, Illinois coming in very strong. Pod counts so far in Illinois through half of the day are up 21% versus USDA looking for pretty much a flat yield forecast from last year. So what do you make of this so far? Again, as we've stated through most of these numbers, I don't think there's anything earth-shattering here that's going to get this market overly excited. Yes, we can bicker about the corn numbers, Ohio coming in shy of what USDA is projecting, South Dakota coming in a little shy, but overall, I think it's going to be hard-pressed to see a number that's not below 170. I think we're going to see something in the 172, 173 range. Maybe not the 175 that USDA's got right now, but certainly there's nothing in these pro farmer numbers that would lead one to believe we're well below 170. Turning now to some export pictures. We talked about this last week. Looking at Ukraine, Argentina is out of the market really in terms of being competitive in corn movements this year because they are the dominant player supplying Brazil in their crop shortfall this year. So we're really wanting to pay attention to what's going on in Ukraine, what their prices are relative to the U.S. And last week we talked about how, in the last part of, or in the last year really, we were at such a premium to Ukrainian corn, Argentinian corn back in last year's harvest, but that has certainly changed, and we're seeing, or at least we were seeing, quite a discount of U.S. corn relative to Ukrainian corn, although this week's report from Ukraine versus the U.S. shows us to be about on par. We took a steady to slightly higher price in the U.S. while the Ukrainian price fell, making our prices on par with Ukrainian prices. It was not necessarily good news for our export situation. And like we talked about, farmers out there that are trying to figure out what to do, not only with new crop, but it's probably a lot of people holding on to some old crop. Looking at historical norms, when we have years of record yields, looking back at the three most record crop year yields, then we see 2014, 2009, 2004. The bottom in the futures market, the time when we bottomed in those marketing years, was roughly either in early September, late September, or early November. So, using those as sort of a benchmark for going forward, we may not be in for the lows. Yes, we can bicker about the yield numbers, but all likelihood seems to point to a record yield this year. And so potentially the lows are still yet to come. That's all we've got for today on Grain TV. As always, visit us online at grainedge.com to learn how we can help you in your own grain marketing situation. Tomorrow, we'll be talking about export sales numbers. Look for a high-end expectation of soybeans for new crop around 1.3. That'll be the benchmark that people are looking for to get any sort of push in the soybean market. That's all we got today. See you tomorrow. As a GrainEdge trading client, you'll get our Technical Alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainedge.com to become a client.